time to file your business's tax return. Are you getting all the tax credits you deserve? The Employee Retention Credit, ERC, could significantly reduce your tax burden. The rules can be complicated though. You must file your ERC tax returns correctly. Keep watching to find out more. Employee Retention Tax Credit. The Employee Retention Credit is a refundable tax credit for qualified wages your business paid to employees. Congress created the ERC as part of the CARES Act in March 2020. It was one of many provisions to help struggling businesses. Congress later expanded the ERC in several legislative packages related to COVID-19 relief. For the tax year 2021, eligible employers can receive a credit of up to 70% of each employee's qualified wages. The maximum amount is $7,000 per employee per quarter. For the tax year 2020, you could receive a credit of up to 50% of each employee's qualified wages. The maximum amount is $5,000 per employee for the year. Who qualifies? Employers are eligible for the Employee Retention Credit if they engaged in a trade or business during 2020 and/or 2021, and a government order fully or partially shut down its operations, or the business experienced a significant reduction in gross receipts. Nonprofit businesses are eligible for the ERC. Some government entities, like public universities and federal credit unions, also qualify. Businesses with 500 or fewer employees get the most relief from the ERC. Larger companies can also benefit, but the definition of qualifying wages is more restrictive. Qualifying wages. To properly file your ERC tax returns, you need to know how much you paid in qualifying wages. Qualified wages are the wages and other compensation you paid full-time equivalent employees in the relevant quarter. You can include qualified health plan expenses associated with those wages. The number of full-time employees your business had in 2019 affects your qualifying wages. The IRS defines a full-time equivalent employee as an employee who worked at least 30 hours per week or 130 hours a month on average. Businesses with more than 500 full-time employees in 2019 can only claim the ERC for wages paid to employees during non-working periods like a shutdown. Businesses with 500 or fewer full-time employees can claim the ERC for wages paid during working and non-working periods. Latest changes. The Infrastructure Investment and Jobs Act made a significant change to the ERC. It retroactively ended the ERC for most businesses as of September 30th, 2021. The deadline under earlier legislation was December 31st, 2021. Recovery startup businesses can still claim the ERC for the fourth quarter of 2021. A recovery startup business is an employer that began operations on or after February 15th, 2020. Your annual gross receipts must be less than $1 million. ERC tax returns. The Employee Retention Tax Credit can be a significant benefit for your business. If you qualify, you could save thousands of dollars per employee and potentially receive a refund in your cash flow. However, filing your ERC tax returns correctly can be complicated. That's where ERC Today can help. Our tax experts use a streamlined process to evaluate your situation and file your tax return quickly. We can securely handle your ERC filings or amended filings. Contact us today for a free filing estimate. We'll help you get all the tax credits you deserve. And if you enjoyed this video, be sure to like, comment, and subscribe.